Welcome to Explain the Charts, where we break down the market's movements with a focus on news and chart data. Today, October 10th, 2024, we're diving into the S&P 500, represented by the SPY ticker symbol. Recent headlines suggest that investors are cautiously optimistic, with the S&P 500 hitting record highs in the run-up to the Consumer Price Index (CPI) report. The markets are eagerly awaiting the CPI release, which could influence the Federal Reserve's monetary policy decisions for the remainder of the year. However, there are also concerns about the impact of rising borrowing costs on economic growth, causing some market volatility. Let's examine the SPY charts to see if they reflect these sentiments and what insights they can provide for traders. Looking at the daily chart, we observe a clear upward trend in SPY over the past several months. The recent record highs mentioned in the news are evident on this time frame, showing a strong bullish momentum. Notice how SPY has broken through previous resistance levels, suggesting that bulls are currently in control. However, it's important to remember that even in a bullish market, corrections can occur. Let's zoom in on the last few weeks to see if there are any signs of a potential reversal. We see a slight pullback in the SPY from its recent highs, but it's not a cause for immediate alarm. The candlestick patterns during this pullback are relatively strong, indicating that the sell-off might be temporary. The price has found support around the 560 level, which could be a key area to watch for a potential bounce. Keep in mind that the one-year return on the S&P 500 is currently at 34.38%, which is significantly higher than the long-term average. This data suggests that while there might be short-term corrections, the overall bullish sentiment remains strong. Now let's shift our focus to the one-hour timeframe to get a more granular view of the recent price action. The one-hour chart reveals more volatile fluctuations, but the overall trend remains bullish. We can see that the price is currently consolidating above the 570 level, suggesting that buyers are defending this area. It's crucial to identify key support and resistance levels within this timeframe to optimize entry and exit points. Let's zoom in on the last 24 hours of the one-hour chart to get a clearer picture of the current situation. Over the last 24 hours, we observe a pattern of higher highs and higher lows, reinforcing the bullish momentum. The price has tested the 572 level multiple times, but failed to break through, indicating a potential resistance zone. If SPY breaks above this resistance, it could open up a move towards the next significant level around 575. However, if the price fails to break through 572 and begins to decline, it could signal a short-term correction. Finally, let's glance at the 15-minute chart to see if there are any immediate trading opportunities. The 15-minute chart provides a fast-paced view of the market, allowing us to identify short-term trends and potential breakout points. We can see a series of bullish candlestick patterns in the recent past, suggesting that buyers are actively pushing the price higher. The price has been hovering around the 572 level for the last few hours, indicating a potential area of consolidation. If the price breaks above this level with strong volume, it could signal a short-term bullish breakout. To recap, the SPY is showing signs of bullish momentum, but short-term corrections can't be ruled out. The daily chart reveals a strong upward trend, with recent record highs and a break through resistance. The one-hour chart shows consolidation above the 570 level, with potential resistance at 572. If SPY breaks above 572, it could open up a move towards 575. On the 15-minute chart, we see a potential consolidation around the 572 level. A breakout above this level with strong volume could signal a short-term bullish breakout. Keep an eye on the CPI release, as it could have a significant impact on SPY's direction. Also, monitor the 10-year Treasury yield, as rising borrowing costs can impact market sentiment. Remember, this analysis is for informational purposes only and should not be considered financial advice. Always consult with a financial professional before making any investment decisions.